Hello, everyone. And it is Ramira, aka Mary the Goddess. Hopefully, you can hear me. I got the microphone on, but the plane is going by. Um, Happy Father's Day. This won't drop on Father's Day, but I'm recording this on Father's Day, so happy Father's Day to people out here. Um, you know, Men are unappreciated. Definitely got to show appreciation where appreciation is due to the real men that's out there. Now, yeah, if you do not know me, my name is Ramira, aka Mary the Goddess. I'm 31 years old. I'm a businesswoman and I ride things freely, and I'm always here to teach you how. Um, if this is your first time joining me, I'm a forex trader or a foreign exchange trader. I trade the largest financial market that there is. It runs 24/5. There's two different types of ways to trade forex. Y'all just got finished washing dishes, so the hands is ashy. There's two different types of ways to trade forex, either fundamental analysis or technical analysis. I'm a technical analysis trader, so uh, we go back in time, look at the previous price movements and patterns in the market, and then we predict what may happen next. Um, as a technical trader, one of the technical tools that I use is the candlestick, Japanese candlestick. So I am teaching you guys the candlestick trading Bible. This is how you landed me. This is how you got me. All right. All right. So if you're here to learn and you're here to grow, then let's get it. Um, let's see. If this is your return time following me, okay. Oh wait, hold on. Before you go, I forgot. Before I get to my my new people. Okay, make sure that you follow me everywhere at Mary the Goddess, MARATHEGODESS, two number twos. Yes, I know it's Wendy and Goddess. That's how I want it to be. Um, yes, my returning time people. All right, my already subscribers. Welcome back. My watch is off. I just tried to race my son just to see what his level was at. I was getting him at first, but then of course he finished off strong because he was running slow in the beginning and he gonna speed up at the end. But it's okay. I know his tactics, so now I know what to do next. So boom, I got you. Um, y'all. Okay, so I'm thinking it was yesterday. If not yesterday, it was Friday. I seen this guy on a horse. His name was King, but it was the horse that I fell in love with, y'all. Yeah, he was wrapped up in blue, and I got to pet him, his 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 nose and everything, and look into his eyes. But the one thing that I did not like, and I don't understand why people do that. Like, here's this one guy, he has the phone in his hand, and he's close to the horse, like, oh, look at the horse, and I'm like, he don't want you to record him, as if I could talk horse, right? But it was just like, at least just don't be right. Like, what if the animal react to something? I don't think people be realizing that. Yes, it's cute, it's beautiful. It's a horse. But yeah. All right, so let's get comfortable. Yeah. We're going over the Candlestick Trading Bible. Let's get into it. If this is your first time watching me, I just want to let you know thank you so much for getting here and subscribing and all that good stuff. You're in the right place. However, you're at the wrong video, and that's okay. All right. So if you already have this Candlestick Trading Bible downloaded, you need to go over the introduction and overview and the history of the candlesticks. Okay. I did not go over that in this playlist. Now, I do have previous versions, but not in this playlist. So that's your homework. Don't skip up over that because that is vital information on why candlesticks is important and why and how they could be able to be used in not just the forex market but any market. And then I need you to go over the candlestick patterns. I don't care if it takes you weeks. I don't care if it takes you months until you get it down packed. This is the foundation that you will need of the candlesticks. And the and know the psychology behind them. Right? It talks about the open and close of the candlesticks and what are candlesticks are most powerful. Right? All right, then we go over market structure. So today we are going over the pin bar candlestick pattern. So before you go to this page, this chapter, ice cream. Huh? Ice cream. Okay. It's 8:30. I told them they can have ice cream at 8:30. So yeah. All right, the pin bar candlestick patterns. Let's get into it. So stop watching this video. Go watch your previous videos. That's your homework. When you get here, you will be right on time. There's no rush in this. This is not no race. This is your life and your future life. What you gonna do with it? You gonna rush? Okay, you gonna take shortcuts. You're not gonna really learn this. You're just gonna waste your time. Okay. All right. All right. Sorry, because that wasn't even supposed to come out, but it came out. Y'all know. All right, so the pin bar candlestick pattern strategy. The pin bar candlesticks is one of the most famous Japanese candlesticks. It's widely used by price action traders to determine reversal points in the market. In this section, you will learn in detail how to identify potential pin bar signals and the conditions for high probability setups. A pin bar is a chart candlestick. It is characterized by a very long tail that shows rejection and indicates that the market will move in the opposite direction. The area between the open and close is called the real body. Typically, all pin bars have very small real body and a long shadow. All right. A bullish pin bar is known for its lower wicks, and the bearish one is characterized by long upper wicks. The color of the candlestick is not quite important. However, bullish candlesticks with white real bodies are more powerful than the candles with real black bodies. And on the other hand, a bearish pin bar with black real bodies are more important than the ones with the white real bodies. So basically, what they are saying is if you see that bullish pin bar um, and the color matches up, it's either white or green or whatever color that you indicate, which is bullish for you. So you got the bullish color and you also got the bullish pin bar formation. That's when it's most powerful. Colors does not matter, but it's more powerful when the color matches what is printed. The price action is printed. All right, so see how the pin bars look. All right. That was a bullish. Here's the bearish version. Yeah, I just realized that I had some berries that's being grown in my backyard. However, everybody in my family is like, don't eat those. So I'm not gonna eat them. But it was cool. I did not know. All right, so to be honest, quality price action setups don't exist in the market because you will see that sometimes you can find a high probability setup, you feel very excited about it. You take your trade with confidence, but at the end, you will be frustrated because the signal fails for unknown reasons. That happens a couple times because the market doesn't move due to pin bar formations. The bird is the word right now. Okay, I don't know if y'all can hear the bird, but she's talking. But at the end, you will be frustrated because the signal fails for unknown reasons. That happens a couple of times because the market doesn't move due to pin bar formation. What moves the market is the law of supply and demand. Let me give you an example. If you can identify quality pin bar candles near support level in an uptrend, this is powerful buying signal to take. You shouldn't ignore it. But if the amount of money that buyers put in this trade is less than the amount of money that sellers risk in the same trade, the market will not go in your predicted direction. So It's whoever who puts in more orders, the buyers or sellers. Okay, these skeetos out, and y'all not about to be biting me up. All right. If the signal fails, it doesn't mean that your analysis is wrong or pin bars don't work. It's just because the market didn't validate your decision. Therefore, you accept your loss. You look for another opportunity. You may ask yourself, why should we look for quality pin bars setups if the market doesn't respect them? As you know, trading is a game of probabilities. There is no certainty. This is why you should evaluate your pin bar setups from multiple angles. All right. The fact that you're looking for quality setups means that you are trying to put the probability success in your favor, which is the right mindset of successful traders. To determine whether or not a pin bar is worth trading, the price action signal should respect the following criterion. Okay, guys. My ladder not out here, so I can light this thing. Oh, yes, it is. Okay. All right, so the pin bar formed in bigger time frames, such as the 4 hour or the daily time frame, should be taken into consideration. Okay, because if you look at the smaller time frames, you can easily spot a lot of pin bar signals. These setups should be ignored because smaller time frames generate a lot of false signals. See the illustration below. All right, so here's our illustration. The pin bar formed in line with the direction of the market is more powerful than the one which is formed against the trend. Okay. If you can identify a clear trend, this means that you know who is in control of the market. Is it sellers or is it buyers? Uptrends or downtrends? The formation of the candlestick pattern, which the trend makes it so effective. See the chart below. So the formation of the candlestick. So if it's uptrending and it's pushed and it's giving us some bullish pin bars, they are most powerful. If it's a downtrend, they're giving us bearish pin bars, most effective. All right, so see the chart below. Okay, so they got pin bars with the trend and pin bars against the trend. Says as you can see the chart above, bullish pin bars that were formed in line with the uptrend work. And they should be taken into consideration. But the bearish ones that were formed against the trend should be ignored. The anatomy of a pin bar is important as well. You have to make sure that I'm sorry. You have to make sure that the candlestick is a pin bar by looking at the distance between the real body and the tail. Pin bars with longer tails are more powerful. All right. So the psychology behind the pin bar counter formation, pin bars are formed when prices are rejected. This rejection doesn't indicate a reversal signal because the price action setup can form everywhere in your chart. All right. So it um it tells us that price is being rejected. However, it doesn't indicate that it's going to be a reversal. All right, the most important areas to watch when trading pin bars are major key levels such as support and resistance, supply and demand zones, and moving averages. So supply and demand zones is the amount of orders, who's putting in what at the time. Support and resistance is the area where prices reverse or change direction. And then we'll talk about moving averages in just quite a bit. All right, the formation of the candlestick chart pattern and these levels give a clear idea about what happens in the market. If the rejection was near support level, for example, this is obviously indication that the bulls are more powerful and they are willing to push the market to go upward. All right, here's our example. All right, if the formation of this candlestick occurs near a resistance level, it indicates that the bears rejected prices and prevent the bulls from breaking this level. So this means that sellers are willing to push the market down. See the chart below. We got fireflies or dragonflies or whatever you call them. I remember these when I was younger. I used to catch them. I tried to catch one for Demir the other day. He's like, "Mom, what is this?" All right, it says if you understand the psychology behind the price action pattern formation, you will be able to predict what is likely to happen in the future, and you will make good trades based on high probability pin bar signals. All right, so these are just how it looks in an uptrend or downtrend. I'm not going to give you examples just yet because we're going to talk about trading the pin bars candlestick with the trend. All right, so if you are a beginner trader, I highly recommend you stick with the trend. If it's an uptrend, get in freaking buys. If it's a downtrend, get in freaking sales. Okay, don't counter trend. Don't be trying to sell when price is buying and vice versa. All right. When you master trading with the trend, you can then move to range bound markets or even counter trend. All right. This strategy is simple. You start by identifying a clear uptrend or downtrend. You wait for a pin bar to occur after a pullback to support or resistance level. Here they have the example. All right. The figure below. Oh, wait, hold on. All right. So, say for instance, this is trending down, as we can see. Yes. Okay. It's trending down. Price then breaks the previous swing points. We've been talking about those swing points for the longest. Um, Starts to retrace. When the retracement happens, that pin bar is formed and it then goes down. It says the figure below shows us that price action signal works if it's traded with the trend. As you can see, the price was rejected from the resistance level, which indicates that the bears are still in charge of the downtrend. I think they meant to say above, not below. The formation of the pin bar indicates the end of a retracement move and the beginning of an impulsive move at a resistance level in line with the downtrend. Okay, guys, we were talking about impulsive move and retracement moves. How do we get in at the beginning of an impulsive move to actually go with the trend? Here is one indication, the pin bar. Pin bar indicates the end of a retracement move and the beginning of the impulsive move at the resistance level in that example. All right. This is a high quality setup because all of the following criteria are respected. The pin bar is well formed in line with the direction of the market. So it's probably that bearish one is red or black in this case. So we got the color in combination with the formation of it. All right. The rejection occurred in the major key level that represents a hot point in the market, which is the resistance level. Okay. Um, it was acting as a support, then it breaks, come back, then acts as a retest. Okay. All right. And then the rejection occurred. We already talked about that. All right. And then the risk to reward ratio is good and it's worth trading. Sometimes even in the market is trending, we can draw support and resistance level because price moves in a certain way which we can't spot statistic key levels. If you are in if you are in this situation, you could use the 21 moving average, which will act as a dynamic support in an uptrend market or a dynamic resistance in the downtrend market. See the illustration below. All right, so now we're talking about that 21 moving average. What and what? I got you. Hold on. All right, so here's that example. Sorry, y'all, if y'all heard me. Um, it was a bird. That's the one moving average pin bar. It says, as you can see in the chart above, the market was trending down. Using the 21 moving averages helps us to identify dynamic resistance levels and high probability pin bar setups. See another example below. Is this in the uptrend, still 21 moving average. All right, the 4-hour chart above illustrates how the 21 moving average could help us find key points, these birds, key points in the market When prices approaches the moving average, the buying pressure takes place in the market and then price goes up. The pin bar signal is clear on the chart because the trend is bullish. The price action setup has a bullish anomaly as well, and the rejection from the 21 moving average is a confirmation signal to buy the market, right? So, I am not going to talk about US 30. Oh, let's just go to Euro USD. All right. So they said 4 hour, 1 hour. I mean 4 hour daily. I want to find a textbook one. I guess something like this. Yes. This is something. The trend. Let's see. Our other trends look. There's one, but I want something in combination. Okay, there's one. All right, so to put on your indicators, um, there in trading view, there's like a little line and a bar chart. It says indicators, matrix, and strategy. All right, so you can type in moving average. All right, I use a moving average, simple, or you can use exponential. It doesn't, I like these two. I'm not gonna say it doesn't matter because they do matter. All right, so we turn on the EMA. Sorry, you only need to click it once. I clicked it twice. All right, so to change it to the 21, let's go to settings. It's gonna be SMA here, 9. So right now our length is 9, but in the book we're talking about 21 moving average. So just change it to the 21 moving average. So here we have that pin bar. It's in line with the trend. It's touching that 21 moving average just on a daily time frame. So the next day it did go bullish and then it retraced. I want to see if I can find one. I guess we can say something like this. Small real body, the long lower shadow, and then she goes up. Let me see if I can find another one here for this. And then what was the other example? So we seen it on how it looks in the 21 moving average. All right, let's see if we can find some in line with the trend. So we have one bearish. However, that color, we know that the color doesn't matter. It's under our 21 moving average. So when it's below, this is acting as a resistance. If it's above, it's acting as a support. Whatever is above here, acting as a support. Whatever below the 21 moving average is acting as a resistance level. All right. Um, I want to find a better one. I want to find a better one. Like kind of textbook. Okay, so this would be kind of textbook. All right. I'm gonna just hide this 21 moving average. All right. So here we have our resist supporting our resistance level. This was a previous swing point. So something just like textbook. All right. It was trending down. We were with the trend. Price then embrace acts as a retest. All right, so we are trending down. Okay, price then breaks, acts as a retest. The pin bar is formed. Okay, at the resistance level, and she goes down. Let me put this in the center right there. All right. Here we have our pin bar. All right. I like that. All right, so that's a great example, pin bar and resistance. And now look, if we add that 21 moving average on, boom. Okay, in line with it. It's literally on it. It's screaming. Take the damn sale. Take the damn sale. What are you doing? No. All right, downtrending. The pin bar and formation is in line with the trend. The color is also leading up to it. Is acting as a resistance, the rejection from the resistance level. And then that 21 moving average. That's your 2 to 3 confluences that you need to get into a trade. And our risk to reward is high. All right. So say for instance we get in after the close of that candle. All right, and we just sell down. And we just sell down. All right. That say 4,722 pips. How long did that take? 21 days. 4,000 pips in 21 days. Okay. All right. It's getting dark out here. I'm getting scary. All right. Let me see if I can find one more good one for us. It ain't no short real body, but I guess something like this. Let me see. All right. So sometimes here we have another example, support and resistance level. However, it's not under that 21 moving average. So I don't want to confuse you. So let me turn this off right quick. But all right, we are trending down. Lower lows and lower highs are being formed in the market, as we can see. And look, get into that damn sale. All right, so um, all right, so if price stand breaks, comes back, acts as a retest, not once but twice. It's really good move right here. All right. There's a fake out to the other side, goes down. But then here's that pin bar after the pullback that has been formed near that resistance level again, and then she sells down. Okay, this on the daily time. I mean, hey, if you would have been swinging this trade, okay, confirmation after confirmation, get into the damn sale. All right. All right, them birds is coming out. It's getting dark out here. Um, so we have completed the pin bar strategies, how to trade with the trend, how to trade using that 21 moving average, right? And then our next session, we're going to do trading tactics, trading with confluence, examples, and then how to trade in those range bounds. So once you get used to trading with the trend, then you can move to range bound markets or counter trend, they said. They're not going to teach you how to counter trend trade in here, if I'm not mistaken. However, at least they're teaching you how to make money in a range bound. Yeah, that's all that I have for you guys. Make sure that you comment and tell me how you like this example. If you need more examples, I can definitely do more examples for you guys. If you're not already following me, make sure that you follow me at Marita Goddess, MARATHEGODESS, and two number twos. Yes, I know it's Wendy and Goddess. That's how I want it to be. All right, I'll see you guys later. Bye.